Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is January 2nd, 2018, the first trading day of the year. And I thought I would take a look at crude oil, ETF being USO on the long side. We've got the short, intermediate, and long-term trends all pointing to the upside. You got the technical rating pointing to the upside. You got some warning signs here that are popping up here. On the elastic level, we got a pivot high, and we have on the power level a rocket that has occurred, meaning the market has gotten a little bit ahead of itself. Easiest way to explain this is if we take a look at in this case, crude oil. These are daily bars inside of TradeStation. And you can see, I know it's kind of hard because crude oil has been so very strong as of late, but you can see in the upper portion here on the far right that the market has broken above the resistance level, which is now support at 59.06, which is what this level was. It was a 20, and we had a lazy day a little while ago that caused the market to really rocket above that. And basically the elastic level and the power level are telling us that we've gotten a little bit ahead of itself, and it'll probably come back down and find some support at the 59-ish level. So we'll see what does take place here. For right now, if we take a look at the website, we have a couple of systems that are out there at the present time that are short the market. We have three in total. We got a 60-minute, a 45-minute, and a 120-minute bar system. We got two separate systems, Arcturus and Rigel. And in that particular case, we have three different time frames. So what they're betting on is that the market has gotten ahead of itself and is going to probably come back down to that support level, and then we'll see what does take place. If we do take a look at the at crude oil, and we take a look at some of the different time frames when it comes to the seasonals, if we focus on the 5 years, you can see this is the tail end of last year. Obviously, I've not updated it, but you can see that going into January, at least the first 15-ish days of January, that it's typically bearish. So there again is telling us that the market has gotten ahead of itself. It's going to most likely come down to that support level that I was talking about at 59, and then we'll see us whether it breaks below that or if it's able to actually hold at the 59 level. Now that 59, when we take a look at things on a longer term basis, you can see these are weekly bars, these individual green bars, and a lot of data on here, but what I want you to focus on are these two magenta periods. We got a 29 and a 24 at the tail end of these different bars. So we have on the weekly bars, we have 59.45, and slightly lower below that we have 58.87. Those were the weekly resistance levels. Now obviously being above it, they're now going to come down to support. So we have three different levels: 59.06 on the dailies, 59.45 on one level of the support levels on the weeklies, and then the 58.87, so I'll just call it 59-ish. And that being the case, if we were to come back down to support, that those would be the levels we'd be looking at. This was a dramatic and a huge support level to the market, or at least it was a resistance level, I should say, now acting as support. So if it does come down, it's going to have some major strength to really push it below that level. So let's just watch these levels from where we are right now, which is 60.37. As I'm doing this, we'll see as whether or not that the market is able to fall down into the 59-ish, 59.5, 59 level. And if that is the case, then those short-term systems that I was referring to would be making money and doing quite well. And if the seasonals really start to kick into gear with the weakness that we could see, we could theoretically come down to the 58.46, this next level below there. I'd be surprised if we really came down too much further than that, at least on the data that we have available to us right now. So let's see what does take place. But short term, the systems are short. We're above support, but we're going to probably come back and touch support, and then we'll see where things kind of go from there. We'll take a look at another market tomorrow and continue on with some more analyses throughout the year. We're going to be doing some workshops here. We're going to talk a lot in the coming weeks or so about some of the patterns that we actually have, and there's going to be some analyses that we'll be doing and how to evaluate systems and things of that case. So look forward to doing some of those types of workshops where we'll get into a lot more detail and be able to start answering client questions. So thanks for watching, and we'll look at another market tomorrow. Bye-bye.